Ladies and gentlemen, greetings, my party people. Thank you for tapping into my very first masterclass, man. I'm so excited. This is something that's different for me. I'm jumping out my comfort zone, but I mostly want to do this for you. I want to show you what I do, how I do it, give you some insights on it, and to show you how you can also do it and how you can also learn this skill, and you can use this skill to make you, a lot of money in the future. So give me feedback, tell me some things that I did wrong, tell me some things that I can do better, because I want to make this experience perfect for you. So without no further ado, we're going to get right into it. I don't want to waste a lot of time. I don't want to be talking a lot of time. I don't want to be talking a lot. I know you don't want to be just sitting there watching for a long period of time. All of our attention spans are shrinking by the month. So we're going to go ahead and jump right into it. I want to give you a little background on myself first. My name is Otis Smith, aka Sir Shark. My company is Shark LLC. Our community operates under Planet Shark. We're on our own planet with this, man. We're doing our own thing, own lane. Everything is our own. So without no further ado, let me jump in to give you a little proof of concept. I want to go ahead and show you pretty much I know what I'm doing. You know what I'm saying? A lot of people don't want to listen to people that don't know what they're doing. So as you can see here, right now, 3/28, it's 3/28, February 6, 2025. This is my overall, one of my account balances. Right now, $593,194.97. I've been trading for about 5 years now. This has been a journey. It's been a long journey, but it's well worth it. And I want to show you how you can generate this type of money and how you can do something like this. I don't know how else to show you. It's mine to make sure, a lot of people call me a fraud and that this is fake, but let's see if we can do this. Let me select an account. I have multiple accounts, obviously. You can see right here, account balance 26, 593,000. I don't know how else to show you. Hopefully you believe me. I'm not here to mislead you. I'm here to help you. So, enough of that. I'm not bragging or anything like that. Let's just jump right into what I want to talk to you about. So, first things first, when you're starting trading and when you're starting investing, you have to make sure you set clear investment goals. So now, what are clear investment goals? Do you want to make a certain amount of money? Are you trying to buy a house? Do you want to buy a car? Are you looking for this to be something that you do for the rest of your life? Is this something that you're just looking to do just here and there? These are goals that you need to set for yourself. You need to make sure you know what you're getting into and know why you're getting into it, and know pretty much, what are you working towards? You can't just close your eyes and just throw darts aimlessly, at a bullseye and think you're going to hit it. You got to open your eyes up, set a clear goal, try to hit it. So when you're starting in trading and investing, the number one thing that you have to do, you have to set a goal for yourself. Next, you need to make sure and determine how much you can afford to invest and how much do you want to risk in your investments. So, it's two crucial points when it comes to this. One of those is you need to only invest money that you can lose. Only play with money that you have no problem losing. If you lose it, it's just like, oh, okay, oh, well, I can make some more. You don't want to trade from necessity. You don't want to, as my second point says, never put yourself in a financially vulnerable position for the sake of investing. Don't go all or none. Don't go zero and hero. Pick you a decent amount of money to start with. You can start with a lot of money or a little money, but it's all about you. It's all about pretty much what you're comfortable risking. Step 3, determine your risk tolerance. Now, something that I preach a lot of my community is your risk tolerance, risk reward, being risk adverse. So this is step 3 when you're starting your trading and investing journey. You need to determine your risk tolerance and your style of investing. So these are tips that I have here for you, some tips for assessing your risk tolerance. I'm just going to read these for you. Number 1, you need to do a self-assessment. Reflect on your comfort level with the ups and downs of the stock market, because the stock market goes ups and down. It's not something that just stays the same. It's not something that continually goes up that everybody thinks. No, you're going to have ups and downs. So you need to make sure that you're okay with that. Number 2, consider your time horizon. Your risk tolerance often depends on your investment timeline. Longer horizons allow for more risk since you have time to recover from the potential losses. Shorter timelines typically require more conservative investments. Sorry about that. And then number 3, gauging your financial cushion. That's pretty much knowing how much you can put up. That's pretty much knowing how much you can use. You know, how much money do you have? What is your assets like? You know, do you have a solid financial cushion? You know, are you able to invest right now, or do you maybe need to pick up another hustle or pick up some more hours, you know, some more shift time to make sure you can have a little extra money that you can play with? Because like I said before, we don't want to trade with money that you need. You trade with money in excess. And then, of course, your next steps, you need to choose an investment account. You know, these are things that I talk about in my boot camp. You know, I help people choose an investment account. In the boot camp, you know, we help you fund your stock account, you know, figuring out how much you need to start with. Pretty much, I can assess your financials and tell you what you should be using, what you shouldn't be using, you know, so on and so forth. Picking your stocks also, our boot camp, we actually show you how to pick your stocks, what stocks you want to pick from. There's so many stocks that you can choose from in the stock market, whether you're trading them, whether you're investing in them, or whether you're just learning about them. You know, we have blue chip stocks, large cap stocks. You have dividend stocks that pay you money every month or every quarter or every 6 months or every annually. You have growth stocks, you have defensive stocks, and then you have ETFs. You also have something that I don't have on here is REITs, real estate investment trusts. There's so many things that you can invest in, but these are things that we dive more in our boot camp, so we're not going to do this right now. So we're going to go ahead and step into our next topic, which is kind of like trading versus investing. So what is the difference between trading and investing? So trading is more so the active investing part of it. Investing is more of the passive investing side of it. So active investing, investors who take an active investing approach. You are constantly on your computer. You're constantly keeping up with the markets. You're constantly checking the numbers. You're constantly checking on news. That is active investing. Passive investing is more of a buy and hold strategy. A lot of people use the S&P 500. The S&P 500 usually brings you about 12 to like 18% year over year. So those people are people that want to park their money and just let it grow no matter what. They're not looking to look at no charts. They don't care what's going on in the world. You know, they put their money there and they let it do whatever for the next 5 years. So what is trading? Trading involves more frequent transactions, such as buying and selling of stocks, commodities, currency pairs, and instruments. You know, the goal as a trader, you know, a lot of people just think trading, we just trade and we gamble. No, the goal as a trader is to generate returns that outperform, you know, the buy and hold strategy or the S&P 500, which is, I told you before, between 12 and like 18%. Here at our community in Planet Shark, we make 12 to 15% every single day. I mean, but we're not going to get into that. You know, next, you know, we have our different type of trading styles. So we have the position trader. The position trader, they're held to months to years, almost more so like an investor. Swing trader, your positions are held for days to weeks. Your day trader, you know, I swing trade, but mostly every day I day trade and scalp trade. Day trading is positions that are held throughout the day only with no overnight positions. And then you have the scalper or the scalp trader, where positions are held for seconds to minutes with no overnight positions. We more so focus on the day trading and the scalping in my community, but I have a section and we do go over lessons on swing trading, and I do give you a couple plays for swing trading that we actually make a lot of money on and gain a lot of percent on. You know, similarities to both of them, but there's differences to both of them. But you have the general knowledge of the difference between trading and investing. So now that we kind of talked about trading and investing, we're going to get into your candlesticks. Let's talk about candlesticks. Oh, no, I'm sorry. I'm getting a little ahead of myself. Like I said, it's my first time work with me. We're actually going to talk about, you know, the different type of markets. So now that you understand, you know, trading and investing, now what is the market? So now when you break down the market, you have two type of markets. You have bull markets and then you have bear markets. You know, don't watch this. I'm just talking right now, clicking through my thing. You have bull markets and you have bear markets. Bull markets is when the markets are going up. You know, everything, your stocks, you know, everything that you're holding is going up. Crypto, everything is going up. Bear market is when everything is going down. It's trickling down. They're losing value. Bulls, you got to think how they attack. Bulls use their horns. They go up. You know, they hit you and they go up. Bears, when they attack, they come down. You know, they come down on you. So that's the best way to understand the difference between bulls and bears. Bull goes up. Bears go down. So now that we know the different type of bull and bear markets, let's see what actually makes a bear market. A bear market occurs when the prices of assets in the financial market decreases substantially over an an extended period of time. Excuse me, I'm sorry. The typical threshold of a bear market decline is 20% or more. So what does that mean? If you look at the highs of the market, if it has dropped more than 20%, then that means you are in a bear market. If from highs it dropped about 15%, you are not in a bear market yet. A lot of people might call it like a recession or, whatever you want to call it. But that is a bear market. For example, the bear market that emerged in the U.S. in 2022 was commonly attributed to some of the combinations of inflation, rising interest rates, falling consumer spending, and the war in Ukraine. It also followed a 2021 bull market that saw the S&P 500 and the Dow Jones Industrial Average climb up to all-time highs. So in the past, 5 years, we've seen both bull markets and we saw bear markets. So now that we know the type of markets that we have and how we can trade within these, let's start talking about the actual charts and when it comes to trading. So when it comes to trading, you have two types of trading. You have fundamental traders and then you have technical traders. So first we're going to talk about fundamental analysis and fundamental traders. So what is fundamental analysis? Fundamental analysis is built on the notion that any given time a company's shares have an intrinsic value which the market will recognize sooner or later. More so fundamental analysis, to break it down for you, you evaluate the company's industry and health of the overall company compared to the economy. So what are some things that fundamental traders look at in fundamental analysis? What is that built upon? You use income statements to look at a company. You look at a company's income statements. You look at a company's balance sheets and, cash flow statements, their filings, their financial health, how they're doing just overall. Not what the chart shows you, more so what the numbers say and what the financials are about. Fundamental analysis is generally for those who are investing and looking for long-term value in the market or in that stock. Now, on the opposite, you have, and also another thing for fundamental analysis, a lot of people use like economic indicators, such as the GDP, inflation, unemployment rates. You look at those type of numbers to determine if you want to invest or not to invest. I am a fundamental trader and a technical trader. So now, let's talk about technical analysis and a technical trader. So a technical analysis evaluates financial assets such as stocks, currencies, and commodities by reviewing the historical price and volume data. Now, Otis, what is the simplified term for that? All that means is you're looking at charts. Technical traders, they use indicators on charts, they use zones on charts, they use certain buying prices on charts based off of how previous price reacted to that area. So now, fundamental and technical analysis, they are very different because technical analysis traders are on their computers a lot more. They're checking their stuff a lot more. In my boot camp, I'll actually go over, and show you how a technical trader marks off their charts and then how a fundamental trader looks through a company's financial health to know if it's a good investment or not. But, that's through our boot camp and through our mentorship. So the main tools of technical analysis, they use volume analysis, relative strength. They use chart patterns. They use candlestick patterns. They use support and resistance, supply and demand, trend analysis. That is what you see from a technical trader. As the opposite, fundamental traders, they use income sheets, as I said before. They use cash flow statements. You can see kind of the difference between the two. So now that you kind of have an understanding of the market, you have an understanding of trading and investing. Next, we're going to dive into candlesticks. So let's talk about candlesticks. I think it's in our next one. Yes, let's talk about candlesticks. So now, candlesticks. Candlesticks is what you see on the chart. So a candlestick is these two things right here. So now when you're looking at a candlestick, again, this is something that I dive deeper into my boot camp. This is just a masterclass, a quick masterclass. I'm just giving you the general knowledge. If you want to dive deeper, reach out to me after this. This is a candlestick right here. When you see these wicks at the top, this top part of the wick right here, that means that is the highest that the candle had gotten to, the highest price that it has gotten to. The bottom wick is the lowest point of the candlestick that it got to. This body, this is where it opens at, and this is where the candle closes at. So you got to think, if you're on a 1 minute chart, 15-minute chart, hour chart, these represent those. So say if this was like an hour bar, if this was an hour candlestick, that means within the hour, the price got to its highest point here. Well, first it opened here. It got to its highest point here. It got to its lowest point here. But after the hour was done, once that hour candlestick was formed, it closed here. That is a candlestick, and that is what technical traders use a lot. You know, we use candlesticks. This is what I use on the everyday basis. We use the 1 minute. If this was a 1 minute chart, that means within 1 minute, the price got this high, it got this low, it closed here, you know, but it opened up here. So in the boot camp, you know, I give you live examples of how this actually looks. You know, I give you live examples about, you know, how to read candlesticks, you know, how to understand what's going on for the 1 minute, for the 5 minute, the 15-minute, hour. I go through all that good stuff. So I wanted to give you just a couple common candlestick patterns that I use on the daily and that you see in the market on the daily. Number one, you know, you have a dragonfly emoji. Remember, this was the highest price that it got to. This was the lowest that it got to. This is the open and this is the close. Now, quick information. This might be a little bit too much for you, but I'm just going to say it. If you see something like this happen, this is very bullish. Why is this bullish? Why does this mean that we possibly might go up? If this was the lowest price that it got to, buyers bought this all the way back up and then it closed right here. So that means there's a lot of buyers in here. Now you look at the gravestone doji. This is kind of like the opposite. The price got to its highs, but sellers stepped in, pushed this all the way back down. So now you know what? There is a lot of sellers in here. You know, let's look at another one. Let's look at hammer candlesticks. A hammer is a candlestick with a long lower shadow and a small real body, often indicating a potential price reversal to the upside. So what did we personally say? Now you're seeing this in real time. It's a little blurry, I'm sorry, but don't worry. The boot camp, we look at live examples. We go through live charting. Now, you have the candlestick, what? It opened up right here. It got to its lowest point right here. The highest point is where? Is where it closed at. So now you understand that, okay, if this shows that we got this low but bought it all the way back up, buyers are in control, bought this back up. So now we understand in this full area we have buyers. So now we know there are no sellers here, which means we cannot move any lower. This hammer doji, this hammer candlestick really works extremely well on higher time frames. So the 15-minute, the hour, the 4-hour, when you have candlesticks like that, the higher probability of a reversal and the higher probability of your stock starting to go up has increased and has raised. Let's look at another one. You know, this is the hanging man. Similar, like I said, we already talked about how a candlestick is formed. Where did it start at? How high did it get? How low did it get? Where did it close at? Those are the questions that you ask yourself every single time. You have bullish engulfing candles. So now a candlestick where you have a red. Now, you see we made a slight lowest point. Highest was up here. We closed up here. We totally engulfed this last candle, which means buyers are in control. We were going down, buyers stepped in, pushed this above where the previous high of that last candle got. So what does that mean? That means there is a good chance that we are going to make a move up and a higher probability that we're going to make a move up. So now that is just, of course you have bearish engulfing, so on and so forth. Now let me give you one pattern that we see a lot in the market. You see the classic double bottom. So now when you have a double bottom, what does that mean? Price came down here once, came up, price came down here twice, and then came up. If you have a double bottom, more than likely you're going to see a reversal happen, because that means that sellers tried to push it down, couldn't push it down anymore, came up. Sellers tried to push it down again, they couldn't pass the lows, and then we push back up again. So that means we have a lot of buyers in this area. That means there is buyers waiting for here. So what does that mean now? If we have more buyers than sellers, and we have more interested buyers in these areas and not sellers, that means there is a high probability of what? That we are going to continue to move up. So this is just a kind of a basic just background. You can see I have so many different ways that I can teach you, different patterns, different candlesticks, different strategies that I can teach you. But these are things that you learn in my mentorship and in the boot camp. So, that is pretty much that. This is my school community. That is the end of my masterclass. That is just a brief overview of the stock market. Very short, very sweet, trying to get you started in the stock market for those newbies that don't know anything about what's going on. This is my first time doing it. I hope I did okay for you, but I'm very interested in you joining me. I want to teach you more. That was just 20 minutes. I've been doing this for 5 years, ladies and gentlemen, 5 years. And you can see I done made a little bit of money on the stock market, so I know a little bit of something of what I'm talking about. So I would love for you to come join our community where I can teach you way more. In our community, you see we have these classes where I got 70 ways to make money, accountability journals. I have all types of different lessons. I got the beginner to trading course, mastering options course, futures trading course, supply and demand course. We have ebooks for you, live charting patterns that I show you live about. I show you live what's happening, live Zoom recordings. I record myself live every day and show you these things. The boot camp is here. This is the boot camp that I was telling you about. It's pretty much a 10 to 14 day boot camp, pretty much rapidly accelerating your process and your profitability journey on the market. So if you're interested in this boot camp, it is $350. I can work with your budget, but if I was to say the best way to kind of get jump started, if you want to just dive into the market and really grasp it, understand it, and make money off rip with it, our mentorship is amazing and our boot camp is amazing. I'll talk about, we have plenty of people that are in here making money that did our mentorship and boot camp. For example, I'll go to the community, let's look at some wins. We have some wins that I would like to show you. Let's just look. Excuse me. We have Chris. Chris did our mentorship right here. Chris made $562 in one day. Terry, my dog, my $438. Chris again right here made another he doesn't show his profit right there, but Chris, another person that he did our mentorship and our boot camp, and he's already made his money after 1 week. Another 500 day. He makes money every day with us. Look at this. I'm talking about $1,400. Like the mentorship is $1,500. You're making your whole mentorship in one trade and in one day. It's amazing. So, this is what I have to offer to you. I live trade in this every day. This is our about page. This is my landing page. This is the stuff that I can give you, the things that I am offering to you to help you accelerate your trading journey, your investing journey, and to help you understand, what is overall going on in this market. I hope this was value. I hope this was a value to you. If it is, man, reach out to me, talk to me. Give me some feedback about this. Tell me what you like, what you didn't like. If you would like for me to do more of this, I will. But other than that, man, I hope you have an amazing rest of your day. I hope that you come join us in our boot camp or our mentorship program so I can help you make thousands of dollars in the stock market every single day. This is not a lie. This is 100% truth. You have to believe me. I can prove to you and I can show you my proof of concept. So, have a wonderful day. I love you. I believe in you. Come join me on your trading journey, and I promise you I can get you to profitability ASAP, baby. See you later, man. Sir Shark out.